In this video, we are going to take a look at Rivian. We are taking a look at the recent development, the company's fundamentals, and determining what would be the best course of action in the current market conditions. If you like my analysis, please consider to like, comment, and subscribe to my channel. In a recent earnings announcement after market closure, Rivian, a prominent player in the electric vehicle industry, shared its financial results, which triggered a lot of reactions among investors. The company's efforts to boost production and inch closer to profitability have led to a closer examination of its financial performance and what these developments mean for its stock. One noteworthy aspect was Rivian's upward revision of its production guidance, moving from 50,000 to 52,000 vehicles. However, some investors had anticipated more robust production figures, so for them the results have been disappointing. Despite progress toward reducing losses, Rivian's cash burn remains significant, primarily due to its ongoing expansion endeavors. The company's efforts to narrow down losses on its vehicles mark a significant stride toward eventual profitability. A reduction in the gross loss per vehicle was evident in the report, indicating a $35,000 improvement compared to the previous quarter. This development, however, doesn't cancel the fact that Rivian is still incurring losses with each vehicle it produces. A highlight was the introduction of a dual motor option to Rivian's product lineup, adding flexibility and choice for potential customers. The financials revealed that Rivian has managed to enhance its gross margin, with an increase in revenue and a decrease in gross loss, a promising sign of operational improvement. The company reported a decrease in expenses, particularly in research and development and selling, general, and administrative expenses, indicating efforts to improve its financials. These improvements are certainly noteworthy, but there are certain challenges and considerations that Rivian needs to address. The high cost of production expansion, including the establishment of the forthcoming Georgia facility, demands substantial financial resources. The inventory buildup, which encompasses raw materials and work-in-progress goods, adds to the financial pressure. The balance between demand for its different models is crucial. Some have witnessed robust demand, but for others the popularity is relatively lower. Uncertainty looms over the backlog, which directly impacts pricing dynamics and margins. The need to fund ongoing operations, expansion initiatives, and facility construction raises questions about the adequacy of Rivian's cash reserves to achieve profitability. The company faces the challenge of scaling up production efficiently and maintaining quality as it navigates its expansion journey. The latest earnings report presents both promising signs of progress and potential stumbling blocks for Rivian's journey. While the company has managed to curb losses and enhance gross margins, the ongoing cash burn, expansion aspirations, and demand variations pose challenges to achieving profitability. The dynamics of the market have shifted significantly for electric vehicle startups like Rivian, especially in the wake of the burst of the hype and bubble that characterized 2020 and 2021. The combined influences of rising interest rates, mounting uncertainty, and the potential for an impending recession can have a substantial impact on the demand for stocks like Rivian. The rise in interest rates can lead to a re-evaluation of investment strategies. When interest rates climb, fixed income assets like bonds gain appeal due to their relatively stable returns. Investors may divert their funds away from speculative stocks like Rivian in favor of safer options. The high volatility and perceived risk associated with electric vehicle startups could lead to a decreased demand for these stocks, causing their prices to face downward pressure. The growing uncertainty within the market can strongly shape investor behavior. During times of economic uncertainty and geopolitical tension, investors tend to seek refuge in more established and stable companies. The roller coaster ride of small cap stocks like Rivian might become less attractive when market uncertainty prevails. As a result, the demand for these speculative stocks may decline, contributing to potential price declines. Furthermore, the looming specter of a recession can accentuate these challenges. Recessions often lead to a defensive investment approach, with investors prioritizing companies that offer stability and reliable dividends. In such conditions, the risks associated with startups like Rivian could deter investors, leading to a reduced demand for these stocks. This could result in a downward pressure on their market value. For Rivian, which operates in the electric vehicle sector, the change in market sentiment could have pronounced effects. The company's position as a startup means it may lack the financial robustness and diversified revenue streams of more established automotive giants. This makes the company particularly vulnerable to market downturns and shifts in investor sentiment. Additionally, given the industry's rapid growth and the inflated expectations of 2020 and 2021, the bursting of the hype bubble could lead to a reassessment of the entire sector. Investors may now demand more concrete evidence of profitability and sustainable growth before committing funds to EV startups. This could make it harder for Rivian to attract investment, further impacting their market performance. Investors must evaluate Rivian's growth strategy, demand trends, and financial management carefully. Notably, the EV sector is undergoing a transformation that may introduce fluctuations and uncertainties for companies like Rivian. As Rivian strives to address these challenges and maintain its positive trajectory, investors are advised to conduct comprehensive research, stay attuned to developments, and assess their risk tolerance before making investment choices. The company's path to profitability holds the key to its long-term success within the electric vehicle landscape. Personally, I believe that Rivian will still have some turbulence ahead of itself, especially considering that the Nasdaq has not massively corrected just yet. This is why we could have a small position now, but certainly not unload them at the current junction. I believe that the pullbacks that Rivian will experience are going to be temporary, so they can be used to increase the exposure at a lower price.